Hello and welcome to the CNBC-TV18's Mumbai Newsroom. I'm Sonal Bhutra and with me is Pavitra Parekh. You're watching Mutual Fund Corner. Today, we are going to talk all about Bandhan AMC's IT Index Fund. For our viewers, the NFO for the AMC opened on August 18th and closes on August 28th. Besides the fund itself, we are also going to shed light on the IT sector as a whole. Is it a good time to look at the sector, which has been seeing some slowdown in terms of growth prospects for some time? But what is the overall picture? Is the valuation reasonable enough to invest in the sector? All of this and more on the show today. And it is at a good time when we are seeing IT come back.
Oh, absolutely. There's been significant buying from the lows as well. So let's welcome our guest on the show. We have Gaurab Parija joining us. He's head of sales and marketing at Bandhan Asset Management Company. Gaurab, thanks a lot for joining us and taking out the time to speak with us today. You know, like Sonal was pointing out, it is a great time to be discussing this space because we have seen after that kind of, correction, even some nervousness that we did get after the earnings, now there's definitely some buying emerging in these IT stocks. So take us through your reason really to launch the Nifty IT Index Fund at a time like this, because globally there are still some doubts on, the recovery in the IT sector.
Thank you, Pavitra and Sonal, for having me on the show. I think it's a very valid and pertinent question, given all the growth apprehensions of the sector, given all that's happening in the world in terms of a potential slowdown, recession, and all of that. Having said that, the AMC does not approach any fund launch from a very near and short-term view. We clearly look at whether the theme is a multi-decadal theme. And if you were to flashback on how the IT index has done over the years, clearly it is one of the better performing index sectors over the years. And hence, we believe it's a great theme to be looking at. Now, if you were to look at what's happening in our lives, the dependence on tech is increasing on a day-to-day basis. Pretty much everything we want needs to be smart, be it a smart TV, a smartphone, smart appliances, which effectively means that the focus is shifting from hardware to software. The technology is getting complex. So if I had to give you an example of buying a car, the whole focus earlier was to look at the engine power, the fuel efficiency and all of that. But today we not only look at all of those factors, but look at the infotainment system, what are the sensors, the battery management systems. So in effect, this is applying to multiple products in our lives. And hence, the need for IT spending is only going to go up. As per reports, it is estimated that IT spending is likely to double over the next 5-10 years from the current 5% to 10%. Now, do remember in all of this that Indian IT services is a global giant in the IT landscape. We control close to 60% of the market share. And as technologies get complex, as there's a scarcity of labor and tech talent in the world, more and more Indian corporations around the world are likely to look at India as the one-stop shop for destination in terms of IT services. And clearly that means that Indian IT sector is likely to do well. If you are to take away the near short-term underperformance of the sector, there's a long runway for this core sector of in IT.
Okay, so yes, you're talking about the longer term periods. The slowdown that IT companies have been talking about is in the short to medium term. But just give us a sense, how has the Nifty IT index performed versus the Nifty 50 index in the last couple of years? What is making you optimistic on the growth prospects? You did mention some of them, but do you think this will be seen in coming quarters itself?
So there are two parts of the question. How has the Nifty performed in the recent times? And secondly, the growth prospects. Let me take the second one first. Now, if you look at the IT industry, the calendar year 21-22 have been by far the best years in the recent past. Clearly, through the pandemic and after that, there was a scramble for most corporates and industries and even on a personal level to upgrade the IT stack. A lot of investments were done. Spendings were up to a significant portion. To give you a perspective, the average IT spends in the year 2016 to 19 was at a CAGR of 4.5%. It shot up to 12.5% in 2021 and has come off to 7.5% in 2022. What that meant was three things. Firstly, there was overspending. Secondly, a lot of projects with low ROI were launched. And thirdly, we've heard of the great resignation, clearly leading to a significant inflation in labor costs. Now, as things start to normalize, we believe a lot of the low ROI projects are getting culled off. Do remember that the IT sector earnings are coming off a high base. And as things settle in, we believe the next 3-4 years should see a kickback in terms of performance. Now, from a perspective of the Indian IT sector is the third largest profit contributor in the Nifty 50. The Indian IT sector has been consistently 2x of dividend yields and the ROE versus the Nifty 50. And hence, we believe if you are to ignore the short-term performances, the IT sector is well poised for decent returns in the long term. Now, coming back to the first part of your question, we really don't think investors should look at 1 or 2 years point-to-point returns in assessing whether a theme is good or not. A better yardstick clearly is rolling returns over 3, 5, 7 years. And if you were to just look at each of the data points of rolling returns over the 3, 5, and 7 years, the IT index has comfortably outperformed the broader index. To give you a number, over the last 5 years rolling returns, the IT index has actually outperformed the broader index by 500 basis, which is no significant low number. So we believe that investors need to assess the long-term story in the sector and not look at what's been happening in the recent past.
Oh, absolutely. That makes complete sense. Also, like you mentioned, product launches are not done with a short-term kind of horizon. You do look at a longer term, and that's what we encourage all of our, viewers to do as well, right? To take a longer-term kind of view on their mutual fund investments. But Gaurab, I want to talk to you about valuations now, because everything said and done, it is a very important metric to consider when you're investing in a sector or a theme, right? Because that does sort of dictate your entry point. Do you think that the current valuations that we're seeing in the IT space, since they have corrected a bit, do you think that they are reasonable now, and do you find them supportive?
Like I said, I think the valuations had taken a real sharp up move in 21-22. It went up as high as 40 times multiples. It's come off significantly from then on, currently putting at around 24-25. So valuations are reasonable. I don't think they're overtly cheap. But again, I think you'll have to look at overall growth prospects in the industry over long periods of time. And we believe these are decent entry levels, while I would still come back and state the fact that these are not cheap valuations, they are fair valuations.
Fair valuations, not cheap yet. So I have to ask you this question, because that's something that would be on every viewer's mind as well, those who are looking at investing in the IT space. So do you think from here on, reasonable assumption can be made that IT sector will see some recovery?
So there is a little bit of a wordplay here. Can the IT sector come back? Yes. Will it come back? We don't know. Clearly, we don't want to take any predictions of what the near term offers. But like I have stated and given multiple data points, we think this is a core industry. It's a large contributor to India's GDP, clearly the big driver for exports in the country. It's going to be part of 5% of global GDP in the years to come. IT tech spends are going to increase. Given all of that, and if you were to flashback as to how the index has done over the last 5, 10, 15 years, this clearly has been one of the best sectors to invest in. Now, if you were to look at the equivalent of a chemical periodic table in the stock markets, do realize that there is sector as also market cap rotation. So the IT index, which was the darling 2 years back, seems to have fallen off. But clearly, like I've been saying, this is not the right assessment to make if you have to consider investing for the long term.
Okay, got that. Gaurab, now, let's talk about some of the metrics that you look at when you normally invest into an index fund, right? With so many funds on offer, especially in the passive side, tracking error is a very important one, and we sort of encourage our viewers to look at that when they're picking. So what is the kind of tracking error that you're working with this, for this fund, and what is the threshold that you have here?
See, the threshold as per regulation is a very generous 2%.
Yeah.
But if you look at most of the index funds we offer or the industry offers, it is significantly lower than that. Like you rightly said, tracking error is a very important element of a passive strategy along with the expense ratios. We intend to be very competitive on that. This is tracked on a daily basis. And we are cognizant of the fact that this is a very important aspect for an investor when he or she chooses a passive investment vehicle.
Okay, so tracking error continues to be a focus point as well with passive funds and index funds as well. So in the Bandhan Nifty I.T index fund, Gaurab, what would the composition be like? Which industries would be covered here?
So the Bandhan index fund clearly would track the underlying index. The index consists of 10 stocks. Currently, 88% of the stocks are in the large cap space, 12% in the mid cap. The sectors we would get into is computer software, hardware, equipments, IT-enabled services, and product solutions.
Okay, that is on the composition. It is going to be tracking the Nifty IT index. Gaurab, we have a lot of more questions on this, new fund that you are bringing. But before that, we're going to get into a short break. I request you to stay on, and then we'll come back in just 2 minutes and continue our conversation. Hey guys, welcome back. You're still tuned into MF Corner here on CNBC-TV18, and we still have Gaurab Parija with us to talk all about the AMC's IT Index Fund and also discuss the sector at large. Gaurab, we were going through your deck and you have mentioned that IT companies have high ESG scores, and that is an attractive trait as well for a fund. But, take us through your perspective on this. Do investors really look at ESG as a parameter? Because, if you just look at the flows that we've been seeing, there has been quite an outflow that we've seen in this category. So do you think it matters that much to investors?
I think you're right in your assessment, Pavitra. I think the reason we picked up the term ESG is more to highlight the fact that IT companies are quality companies. While ESG as a theme is picking up significantly globally, in India, especially on the retail side, ESG is yet to find significant importance, more so because of the challenges in understanding what the concept is. But like I said, I think the idea behind quoting ESG was more to highlight the quality of the companies in the IT sector.
Okay, all right. So on that parameter, a retail investor would definitely look at the sector as well from a long-term perspective. But Gaurab, we have mentioned that this is a sectoral fund. Who will this fund be suitable for in that case? And if someone's a new investor, is that the right way to go about it?
So this fund, like we've been talking, is a sectoral fund or a thematic fund, and clearly should be part of your non-core portfolio. In terms of whether the fund suits you or not, we leave it the decision to the investor, his or her choice, risk profile, and it's best to consult a financial distributor advisor to find whether this fund merits space in your portfolio. And like we stated, this is a sectoral fund, so the investors who have a little bit of a higher risk appetite should consider investing in this fund. Having said that, one of the things of the IT sector especially is that this sector, barring 2022, has not seen a significant drawdown. So unlike most other sectoral ideas, this sectoral fund is a slightly less volatile to that perspective.
Okay, got that. Gaurab, a more generic question now. What time do you really think is, good to be looking at a thematic fund? Because there's some theme playing out in the market at pretty much all times, right? So do you think something or the other will be in favor at all times, and you should just take that kind of approach to it, not try to time it too much?
Absolutely. Like I stated, if you were to look at the analogy of a chemistry periodic table, you'll know that anyone who's been investing in markets or plan to invest in the markets, sectors rotate, winners rotate, be it across sectors or market caps. So if you have to look at that table, 2 years back, the IT sector was the darling of the bourses, huge inflows into the sector from across retail participants. But clearly it's waned off, the interest has waned off in the last 12 to 18 months. Like I've been stating, you have to look at investing in a theme, given your conviction over the long-term story on this, and hence winners will keep rotating. So there is really not a right or a wrong time to invest in a thematic fund.
Okay, all right, Gaurab, thank you so much for joining us today and making us understand first about Bandhan's Nifty IT NFO that opened on 18th August and goes on till 28th August. Why do you think it is the time, or maybe the recovery that will come about in the IT space, and a lot more as well. It was a pleasure speaking with you today. Well, that's all that we have about the IT sector fundamentals, what the valuations are looking like, and a lot more. But a lot is happening in the markets as well. Of course, we don't speak about markets, but mid-cap index, that has hit a record high. And we did see that in the flows as well, at least in the month of July. Mid-cap flows did come down on a month-on-month basis, but they still continue to be on the higher side. And small-cap index as well has seen record high. So small cap flows is something that we are tracking as well. And the numbers look decent. SIP flows more than 15,000 crore rupees in the month of July. So the investor commitment continues in the space.
Let's not forget, this is at a time when we did see a dip in the markets as well, or at least a consolidation come through, right? So the faith of the investor remains absolutely rock solid. I just want to dwell a little bit longer on what's happening with the mid-cap and small-cap flows that we've seen. You know, in July, we saw over 1,600 crores in terms of the mid-cap inflow. Yes, this was a little bit lower than what we saw the previous month, so that had come in at around 1,750 crores, but it's been such a big jump. If you look at even the May figure, it was, you know, around 1,100 crores. So this has consistently been going up, and it is only, you know, a kind of show of strength that we've seen in this pack. In fact, a lot of the fund managers that we've been speaking to as well, Sonal, they've been talking about how the kind of money that they're getting in, it's becoming difficult to invest it, because that is the kind of interest that you're seeing in this space.
And a lot of them, when it comes to the small cap space as well, yes, the month of June saw record high flows at 5,472 crore rupees. It did come off because we did see some profit taking, but a lot of them, the likes of Tata Mutual Fund, they did go ahead and say that they had to stop any more collections in their small cap funds because of the type of interest that they got there. But of course, very important to remember that at a point in time, mid caps and small caps at least, their valuations were still not on the higher side versus say a large cap. Large caps, they were trading at say 16 to 18 times. We did still saw small caps on the lower side if we compare it with the large caps. So it is very important to understand that the comparison still continues. The valuations, a lot of them have said, are way beyond the earnings that they are talking about right now. There's some conservative view coming in. Large cap funds have been seeing outflows for the last 3 months at least, after seeing some inflows. So that continues to be the talking point, the outflows that we are seeing in the large cap funds and the high inflows that we are seeing both in the small and the mid cap funds.
Oh, absolutely. So, I mean, like Sonal was pointing out, it's been 3 straight months of an outflow that we've seen in large caps. It started in May when we saw around 1,300 crores, you know, sort of sucked out of this category, and immediately it moved into the broader market, and that went up to over 2,000 crores in June, and now also, you know, it has come in at over 1,800 crores. So that moving out of large cap index funds is something that has been a theme for a while now, and all of that money really seems to be rushing into the mid and small cap space. So those are just some interesting trends that, you know, we have been observing. The other space that, you know, really looks interesting is this hybrid space. Sonal, we were talking about this earlier as well. What a jump, right? I mean, last month we had around 4,600 crores. This month it's straight away above 12,500 crores. So that is the kind of, you know, move that we're seeing in this space. Today also we were speaking to Motilal earlier in the day, and they were just telling us that this is a very good category to look at, especially at a time like this, and they've been recommending it to their clients.
Okay, all right. So we have taken a look at categories across this space, but with that, we'll take your leave on this edition of MF Corner today. Stay tuned for Closing Bell to take you through the last hour of trade.